All right, let's get right into it. For so many business owners, it feels like your growth is trapped behind this big, heavy door, and the bank holds the only key. But what if there was another way in? What if you could get the exact equipment you need to grow your business, like right now, without having to play by their old, outdated rules? Well, in this explainer, we're going to show you the key to that door.
You know, there's a type of business funding where your credit score barely matters, where you don't need a big down payment, and you can get approved even as a brand new business with zero history. Oh, and you might get to write off the entire cost on your taxes this year. It's called equipment financing. And yeah, about 75% of business owners have heard of it, but believe me, most of them are still overpaying or using the wrong strategy entirely.
So let's talk about that locked door for a second. Why does getting funding from a traditional bank feel so impossible? You know the feeling, right? You walk in, you've got this great vision for a new machine that could double your business, and you walk out feeling defeated. Let's break down exactly why that happens.
The problem is this brick wall of requirements. Banks, they're designed to avoid risk at all costs. So they want to see a near-perfect credit score. We're talking a 680 FICO minimum. They want at least 2 years of perfect financials to prove you're not some flash in the pan. And they demand you have 10 to 20% cash sitting around for a down payment. If you don't check all three of those boxes, the conversation is pretty much over before it starts. But here's the real kicker. Even if you have the credit, even if you have the history, banks want collateral. They need something they can take if things go south. And the reality is, almost half of all small businesses just don't have enough of those hard assets, like real estate or paid-off equipment, to back up the loan. That right there is the great wall of traditional finance.
So, how do you get around that wall? You don't. You use a different door. And this is where equipment financing changes the entire game with one simple, incredibly powerful idea.
Here it is. It's actually so simple. With equipment financing, the asset you are buying is the collateral. The lender's security isn't your house, it's not your life savings, it's the excavator itself. It's the x-ray machine, it's the truck. If for some reason the deal goes bad, they just take back the equipment. That one shift in thinking makes everything else possible.
And look at the difference that one change makes. It's like night and day. Where the bank demands a 680 credit score, equipment lenders can often work with a 580. Where the bank needs a huge down payment, you can get in the door with zero down. And that 2-year history rule, gone. You can be a startup, a brand new business, and get approved in 24 to 48 hours, not weeks or months.
And that's the big secret. It's not that you are unbankable. It's that you've been using the wrong tool for the job. This is exactly why a service like BusinessLoan.Directory is so powerful. They can connect you with a network of over 75 lenders who specialize in this. Their entire business is built on understanding the value of the asset, not trying to cram you into a bank's tiny little box.
But let's make this real for a second. Think about what this actually means for you. Let's say you're a trucker and you're running a couple of older rigs that are constantly breaking down. With this, within 48 hours of approval, you could have a brand new Peterbilt rolling off the lot, keys in your hand, with zero cash out of your pocket. That new truck starts making you money on day one. It's not just a loan payment. It's an investment that pays for itself with every single mile.
You know, if you're watching this and you can already see that new piece of equipment in your shop, on your lot, or in your practice, if that picture is already clear in your head, go ahead and hit that subscribe button. We cover funding strategies that actually put money-making tools in your hands.
Okay, so let's put this growth engine into gear. This isn't just some abstract theory. Let's look at how this kind of funding becomes a real-world engine for growth across a ton of different industries, turning aspirations into actual daily operations.
And this isn't some niche product for just one or two sectors. I mean, look at this. Trucking and construction are obviously huge, but it's also fueling major growth in healthcare, restaurants, and auto repair shops. If your business needs physical tools to make money, chances are this is for you.
Let's get really specific. Imagine you're a dentist or you own a medical practice. You get that new digital x-ray system you've been wanting. All of a sudden, you're doing same-day crowns. Patients stop leaving to go to the practice across town. Your revenue per patient goes up, and your schedule starts filling out. The monthly payment on that new machine is just a fraction of the new revenue it's generating.
Or how about this? You're a restaurant owner, and your walk-in cooler is basically held together with duct tape and a prayer. Equipment financing means that by next week, you could have a brand new commercial kitchen setup. Think about it. No more spoiled inventory, no more emergency repair bills at midnight. Your food costs drop, your chef finally stops complaining, and you can add those new menu items you've been dreaming about.
And for all you auto shop owners out there, this is where the math gets really exciting. Think about what a new alignment machine does for your daily capacity. You go from doing 4 cars a day to 7. That's 3 extra jobs at what, $300 to $500 each every single day. In 1 month, that machine has pretty much paid for itself. In 6 months, it's pure profit. Okay, so getting the equipment is step 1. But the real pros, the savviest operators, they know how to use it to unlock another level of advantages. Let's talk about the master key, your tax strategy.
This right here, this is one of the biggest, most powerful tax incentives for small businesses, period. It's called Section 179. And what it means is you can potentially deduct the full purchase price of your equipment up to over $1 million in the very same year you buy it and put it to use. It's incredible.
So let's see how that plays out. Say you finance a $200,000 excavator for your construction company. That machine immediately lets you take on 3 big new contracts you had to pass on last year. Then, at the end of the year, your accountant tells you the entire purchase is written off, saving you $50,000 in taxes. Think about that. The machine made you money and it saved you money, all in the same year. But then you face a choice. Do you get a lease or a loan? It's not one size fits all. It really comes down to your goal. With a lease, the goal is just to use the asset. You get lower payments, you can write off as an operating expense. With a loan, your goal is to own it. You build equity until it's 100% yours. The right call just depends on your business model. Now, of course, whenever money moves this fast and this easy, you have to be smart. The speed and accessibility of this market can attract some bad actors, so before you sign on the dotted line, you need to know what traps to look out for. So here's your checklist. Watch out for these 3 big red flags. First, always, and I mean always, double-check the value of the equipment yourself. Some lenders will try to inflate the price to pump up their loan. Second, read the fine print for any nasty surprises, like a huge balloon payment at the end of the term. And third, really question any mandatory maintenance contracts they try to bundle in. They can be a huge hidden profit center for the lender.
All right, if you're still here, I know what that means. You're not just browsing. You've got a specific piece of equipment in mind right now. You can picture it, you know what it costs, and you know exactly what it can do for your bottom line. Go ahead and subscribe so you don't miss a single strategy we drop to help you get it.
So here's your next move. It's super simple. Go to BusinessLoan.Directory right now. Tell them what piece of equipment you need. The whole thing takes less than 2 minutes. There's no hard credit pull, no obligation whatsoever. You'll get to see exactly what your options are so you can stop dreaming about that equipment and actually start using it.
I'll leave you with this one last thought. That piece of equipment, the one you know you need to get to that next level, what if it could be on your job site, in your shop, generating revenue for you by this time next week? Because with this, it absolutely can.